institutional order flow entry drill, and it delivered like a fucking gangbuster. Bang, delivered. I don't run out of fucking luck, and I don't run out of fucking yeast. This baker can make fucking cakes forever. As long as the Lord gives me breath and faculties I can still have in my head, I'm going to be doing this. It's not going to stop working. So you might as well just warm up to the idea that, hey, this is the real shit. I'm going to try to learn how to do this. Even if you're just 1% better each week, you're moving in the right direction. And don't let go of it. Keep progressing further and further in the future. You'll see it works. It fucking works. So now let's slide on over into the 930. And this is probably going to be the last long one in the series because I have to make it palatable for Caleb because it is a lot. I'm going to take these. These are just measuring those wicks on the 1 minute chart. And I don't need this. And I don't need the old lows. I'm sorry, the relative equality. We don't need to see that anymore. And we don't need... And we'll keep that one for now. All right, so 930. Okay, so we ran up into the opening range gap, went above it a little bit, broke down. Here's a gap right there. You see that? Right there. We overshoot it a little bit. That's equivalent to a 1 minute mohawk. There's a little bit of a coloring outside the range. You have to keep things in perspective because this is a 15-second chart, meaning every single individual candlestick is representing the open, the highest high, the lowest low, and where we stop trading every 15 seconds. Now it sounds scary, like, man, this is moving too fast. It's moving no faster than it's moving on an hourly chart, a weekly chart, a monthly chart, a yearly chart. It's not moving any faster. The only thing that tricks you by perspective is the frequency of a new candle forming. The range upon which it's moving, higher and lower, it's not changing that. The same amount of time and fluctuation is occurring. So when people say the speed is too fast, they're really talking out of their ass because the market's still doing the same speed. What's changing is the magnitude of the move. That is not determined by the time frame you're watching. That has no direct influence of how far it's going to go. Something occurring on a 15-second chart doesn't equate to or make a 100 pip or 100 handle run in price. You can't think about it like that. The market's going to run like that because of time. If it's the right time for those types of runs to occur, then it will. It matters not whether you're perceiving price through a 15-second chart, a 1 minute chart, 5 minute chart, 15-second chart, whatever time frame you're watching. The magnitude or the distance upon which price is going to move is dictated by the time upon which that move begins. And it doesn't mean that you begin a move on a 15-second chart. 15-second charts just gives you these areas of opportunity for you engaging price. It does not make the move faster, and it doesn't slow the move down. It just gives you opportunities to engage what's going to be in play. Higher prices or lower prices, okay? So we're going to go into the second drop where we're spending too much time in the opening range. We're inside this inefficiency here. We drop down after working the midpoint of it, or not the midpoint of it, the lower quadrant. We drop, institutional order flow entry drill there. Almost an immediate rebalance right there. If I was watching this live as it was going up like that, I would have commented, said, watch for an immediate rebalance. Immediate rebalance is when you have a big down close candle and the next candle opens up and goes right back up to the previous candle before the down close or the larger range candle. And when it touches that right there, that's one of the best on-side indicators that you could ever get in trading. And when you're watching time frames and you're watching and managing your trade, any instance of that occurring and you have not had liquidity taken, it didn't happen yet until that right there. See that? So it could have very easily went up and touched that candle's low. And if it did, that would be an area where I would pyramid. If I was short, I would pyramid there. And I would look for this low to show speed through it. It does. And that would be first partial. But let's go to the conversation about what I outlined real time on the live stream. You watch me execute on something beforehand, and I get the flack all the time. Why can't you talk about these moves in real time, ICT? You're a bitch. You're a fraud. Well, when I do it, you don't pay attention to it. You want me to execute and place my stop loss so you can mimic me. I don't want you doing that. But I will do it here. I have to do it because I want my son to do it. So we have this area. I'm going to take this box and then that shaded blue area. Remember, I was telling you that's the range between the opening price to the lowest low of the day. So now it's gone. And that chart looks familiar again. Okay. So we went down below the lows over here. This is a 1 minute chart on the left. Low and a slightly lower low to the left of that there. So we went down below this low right there. This price action right there is this price action right here. Watch. See how I'm making that little box here on the 1 minute chart? It shows it here on the 15-second chart. So the market has a shift in market structure on the 15-second chart here. The same thing you see on this 1 minute candle. It rallies up. This is a breaker. This is a breaker. This breaker, this up close candle, extend that in time there. So you have a gap, which is a buy side imbalance, sell side inefficiency. And you have the midpoint of that gap, which is consequent encroachment, and then you have the breaker. So you have several things there. If you were watching a 15-second chart, or if I was trading on a 15-second chart, I would have tested the market by entering in here. Would it feed that idea? It rallies up, and it does. Then we said we want to watch it trade back down into the new day opening gap high, and maybe as low as the new day opening gap low on the 16th. Go back and listen to the early part of this stream. You'll hear me saying those things over live price action before it happened. Later on in the stream, I explained why, because the lots, it was over here with this. The bodies were respecting the new day opening gap high, and it didn't do it here. So which low am I going to refer to as a discount array for price? This one. Even though this is lower, I don't care about that. I want this one. Why? Because this one was respecting the same reference point I'm using to enter off of over here on a 1 minute chart. We want to see it open, trade down to that new day opening gap on the 16th. We get that here. Trades down, hit it, and then rallies up. Then we have displacement. We have a separation of overlapping candles, which is what we're seeing in here. All of these candles are overlapping. They're sharing the same price range, the highest high and the lowest low. They keep pricing them back and forth. And then we leave it right there. Wonderful. That's this movement right there on that candle on the 1 minute chart. That's what I said. When this candle was still active on the 1 minute chart, lower left-hand corner, when the candle I'm highlighting right there was still forming, had not closed yet, I said, we're going to see a fair value gap, and I would like to see it create an institutional order flow entry drill. That means go one tick below this candle's low, and then rally up to new week opening gap low, and then we'll see what it does after that. Well, we get that here. Boom, boom, rallies. See that? This, we don't want to see that close back in. Why? Because we're close to a target. And if it's going to go here, it's probably going to run this high. Because there's stops right before this drop down here. Anyone short, where's it going to place their protected buy stop at? Right above this high. So if it's going to go here and trade into this old opening gap, which is shaded in pink, that's the difference between yesterday's settlement price and where we started trading at 9:30. That's the opening range gap. Price eventually trades up into there and hits the new week opening gap high. Look at the bodies. Look at the bodies respecting that on a 15-second chart. Buying and selling pressure causes that, right? Buying and selling pressure causes that much of respect of a level that's supposed to be randomly pulled out of my own ass. No, come on, man. At some point, you're just going to have to take this is something to this, and it's not somewhere else in books. No other teacher, no other author talked about it. Then you have this inefficiency down here, and go over to the left. See that? So this singular candle and this singular candle here are sharing space, the same space, the same range. and it passed through with one single candle on the downside here and on the upside here. Go back and listen to the time when we were trading here. We can see it drop down below the new week opening gap low and trade into the inefficiency right here, but this is a balanced price range because we passed through it here and we passed through it here. So between this candle's low and that candle's high, that little box is balanced. It's like a brick fucking wall. It's like, you will not pass me. Why? Because it's in a buy program. It's going to be reaching for the liquidity. Here, and where we mentioned earlier, where the buy side was eventually, we saw traded to. But the point was, I can see this. I'm watching this, and I'm pairing this up with this over here. So just as much as this is a balanced price range, this candle in the lower left-hand corner, that candlestick's high, and that candlestick's low, those 2 price points define where 2 candles back-to-back have traded in both directions, passed through multiple times in that range. So think about like a trading range. Okay, you've ever studied the trading range in a market? Most traders are doing what? They're waiting for the breakout. Okay, and I'm not a breakout trader, but I can understand that when a market passes back and forth through a predefined range, high and low, it's going to take something significant to go on the other side of it. So if I can see those types of signatures in price action, it's 2 forms of it. Single delivery down here, 1 candle, and I mean it like this. Look at it like this. Conceptually, view it like this. Gap. Well, now we passed through it. So we offered what here? Buy side. What's missing over here? Buy side, because I only had 1 single candle going down. So in a perfect world, a balanced market, a efficiently delivered market, would have the range open all the way up to here and pass back through it, because only this single candle for 15 seconds only passed through the range of the previous candle's low to the candle's high here. So between those 2 price points that's shaded in this blue, it only offered movement going to the downside. How many times could someone buy or sell in that 15 seconds? Not much. So what's it inefficient? It's inefficient in the scope of price moving up doing that same price range, and we get it here. Okay, so because we have 1 single pass on this candle and this candle here, I see that visually as a balanced price range. It's offered both sides. It's true because we have not seen what? The buy side that was going to be targeted, which is the 638.75 level. What does the market do? It trades down. Watch the bodies. The wicks can do what? Do the damage. They can trade outside the range. So I'm looking at this as a balanced price range, but I'm anchoring it to what logic on the 1 minute here. So the bottom of that candlestick right there. Go back and listen to the stream. I'm telling you about this. I'm not referring to the 15-second, but I'm anchoring it to the 1 minute chart. As I'm referring to this candlestick here and this candlestick, that's a balanced price range. But it looks visually like this on a 15-second chart. So there's more room for it to have this little errant price action there, but it's not errant on this time frame. Because watch. We're inside that balanced price range. It did not take out that candle's low. That's reasonable. It's like a brick wall. You're not going to go past me. Past what? The low of that range that's defined by that candle. Find that logic in a trading book. It's not there. It's not there. I had to come up with a way to describe something that I still can't go beyond the scope of what I'm saying here. That's really occurring right there. But because it happens to visually agree with the primary function of what's occurring at that time, it allows me to communicate to you visually. Balanced price ranges are an efficient delivery mechanism. But if they ever fail, that's a huge, huge indication that something has changed, and it's manual intervention. Because algorithmically, the price is going to respect these types of things. But if they stop, the hand's in the mix. The hand is the market maker. The people that are going to push price beyond where you think they're going to go, even my stuff, even me taking a trade, it's not going to work. They're just going to upset it. And that's okay. I can accept that. Problem is, can you? Can you accept an uncertainty of when that's going to occur? I got things that I can see when they get involved in it, but not always. But when I see things like a balanced price range give way, then there's something underlyingly behind the scenes that I don't know what they're doing, but I know now they're in it. Remember the analogy I gave you when Neo in the book, or not the book, the movie, The Matrix, and he sees that black cat walk, and then he looks over and sees it again, and he says, well, that's weird. That's deja vu. I just saw the same cat twice. And they all knew because of experience, shit's changing. We got to go. The agents are on our way, or on their way. There's a change in the matrix. They made a change. That's manual intervention. The same thing when I'm watching price visually and I see things like a balanced price range break. What I think was underway is changed. It's not likely to occur. Here, that's not the case. We're seeing this candle's high, that candle's low because it's moved back and forth. In that range, we're not concerned about price going below that. We're seeing it deliver up, down, up, down, up. You see it? That's the balanced price range here on the 15-second chart. But visually, it's this. This candle's high, that candle's low. But that it's occurring right there. Did that candlestick go below that low right there? No, it didn't. So what's changed? Nothing. Everything's still valid. That's why I was telling you. I believe we're going to go down to this little area here in the inefficiency on the 1 minute chart, but not go below this area here because this is a balanced price range. This range high, that range low. Listen, go back and watch the recording. It's there. This is the part when people watch these portions of it, it sounds like, oh, he's making up shit. I get so tired of saying this shit that if you just listen, I'm telling you this stuff before it happens. Now I'm explaining ad nauseum the details as to why it's doing what it's doing, what it looks like, how to recognize it. Remember pattern recognition? When you're hunting something, you have to know how to track it. This is what a track of this balanced price range looks like. And you can see it going back down into that balanced price range, but not going past it. It says, no, you're not going lower than that. So any retracement down like there, that's not changing anything. It's breaking the hearts of anybody that, may be trading against it. Maybe they're long up here. They chased it, and it's dropping down here, and now they're scared. Like, oh, it's going to keep dropping. No. The market rallies back up, finds some support at the new week opening, got low again, and then here. And I was telling you, watch. Look what it's doing here. During the live stream, see how it's finding support right at the middle of the opening range gap? That's what this is. Okay, the opening range gap. I'm going to take that off. When you take this stuff off like this, it's like, what is it doing? It's hard to discern what it is it's trying to do. And if you start looking for indicators that give you clues, if you start looking at harmonic patterns and things or retail patterns, you're placing your faith on something that doesn't mean shit. But when you start looking at what the algorithm will refer to, that's what I'm pointing you to. I'm pointing to the very reference points, and I'm proving it live. These are what the reference points that the algorithm is going to refer back to. And it's going to behave based on this. Nothing else. And then what does price do? Everything daddy fucking says. And for people that don't want to see me do this and they want to watch me fail in front of you, it kills them. They punch the fucking air. It makes them mad. And I love it. Cry harder, bitch. And the market rallies up. Comes back down. Small little retracement. This is the old relative equal high, which is now, as it retraces, is what? It is a discount array. So old highs is the highest form of a premium array. Old lows are the, I said that wrong, I'm sorry. Old highs are the lowest discount array. It sounds like an oxymoron. How can an old high be? Because if you're above it and trading back down, think, in this regard, think classic support and resistance. Old highs are the highest discount array. Old lows are the lowest premium array. So if you have a reference of where the market's going to draw to, up or down, every time you breach a PD array, you got to look back at the range it just traveled through and map out each PD array. Did you miss a PD array not being traded to? Did it totally disregard it? That's a good thing. That's a good thing. That means you're on side. All those things are indicative that you're on the right side of the marketplace. So to answer the question in continuity, and what I was referring to last Friday when I was saying, when people are asking me, how do you hold on to trades? How do you trust trading and catching big moves? Well, I talked a lot about that. I did a clinic on it today. In the market trades back down in relative equal lows, sweeps it, doesn't touch the new week opening gap here, high. And now we're just meandering around. And this is a 15-second chart. Breaks down. Where's the trade back into? New week opening gap high. What time of day is this? We're in lunch. So what can the lunch market time do? Retrace on what's been profitable. So it goes back against what was been underway in terms of higher prices or lower prices. So it's going to seek the sell stops on moves that's been going up, or it's going to seek the buy stops on moves that's been going lower. Look at the reaction off of that and where we're at here. I mean, if if you don't extend the new week opening gaps on your chart and keep them on there for a few weeks, you're trading blind. Like, you have no idea why the market's doing what it's doing. And if your indicator or if your idea, or if your elbow, last time you had tennis elbow, the market went up, whatever the bullshit logic is that you use, whatever it is, if it agrees with my stuff, your stuff's going to work then. And you can say that's arrogant or not, but that's the fucking truth. That's what makes your stuff work. When it happened to be in those fleeting moments where it's in agreement with what I say the market's going to do. And then there to go. Now imagine you have done the due diligence of studying and price reading, like we're doing, tape reading, and defining certain things, getting familiar with certain logic. When you sign up to learn a language, like I went through Spanish 1 and Spanish 2, and I know a little bit of Arabic. I know a little bit of Spanish. That's pretty much it. Those are the two languages that I learned from. And when I was working for an Arabic family, I learned all the bad words first, obviously, because I want to know when they're cussing me out behind my back. And then I learned the casual stuff. And when you sit down with me and you want to learn how to read price action, and you want to be able to read price action and do the executions like you watch me do, and you want to see me share this logic in a way that's straightforward, easy, real fast, I want you to think about, say you're foreign and you want to learn to speak English. And a lot of my students actually chose to learn how to speak English because of wanting to learn from me this. And now they can speak English because they have been so inspired to learn how to trade. They forced themselves to learn English so that way they can listen to me. Did that come easy? No way. When you learn another language, it takes time. And it's very difficult. And especially the English language, because we have words that shouldn't sound like other words that's spelled completely different. Like wood, W-O-O-D. And then you have W-O-U-L-D. What? Yeah, it's very confusing. And if you have time, you can look on YouTube. Look at Gallagher. He's a very funny comedian, and he's very popular for taking this as a skit idea and makes fun of our English language. And it's like, well, who the hell designed this? This is dumb. But it really is true. I'm thankful that I had learned English initially, because I think I would have been treating it like I did when I was trying to learn French, or I tried to learn Chinese, and that's a really hard language. I tried to write and read Arabic. That's very hard too. It's beautiful to read. Like, I love the way it looks. It's beautiful. But it was hard enough just to learn to speak a little bit of it. And I'm not that fluid with it, but I can get myself through a little bit of a conversation. But learning a language like this is not going to be easy. It's not going to be right away type results. Okay, it's going to take time. It's going to feel like you're never going to get there. But I'm giving you the best way. Like, if you're going to learn a language, work around people that speak that language. And because of the exposure to it, when I was working at a restaurant in the Arab family that I worked for, they would speak in Arabic. And then they would say it in English, so I would know what they were doing. And I would hear him or them say the words. And then over time, I'm like, oh, yeah, he's saying, are they rung up yet? Did they pay yet? Is this done? How many more left? This is not complete. or hand them this and hand them that. And it was monotonous for them, but they were nice enough to do that, so I could learn Arabic. And that's the equivalent of what I'm doing. I use the real world experience of me learning while working. I'm over top of live price action with you, just like I am with my son. So I'm showing you things as the price is happening, to be delivering higher or lower around specific levels that I think are important, that are pertinent to the ideas that I teach. And I draw your attention to the moments where you're met with a decision. Does it continue, or is it likely to reverse, or is it done for the day? And I share my experience in 30 years of doing this with you real time. There really is no better benefit than having someone that's willing to do this. I would have sawed my left fucking leg off as a 20-year-old when I had all that money lost in drawdown and just feeling like I wanted to end myself. Literally, I wanted to end myself because I was like, why did I even start doing this? I'm never going to be able to get it. Like it's just, I don't have anybody to lean on. Nobody can help me. Nobody believes in me. My family thinks it's never going to work. My friends are like, I don't get why you keep doing it. So I had no support structure around me. You have such a wonderful opportunity just to sit here and watch. Even if you don't really want to learn what it is I'm doing, I promise you that if you're watching price and you're trading, you're going to see something you didn't see or expect in what you're watching. And it might protect you. It might change your mind about something you may be overhanded in. Like you're really, really bearish and you're holding a really big short position. And I'm saying, and watch this level, it's probably going to send us up to that level. When I do that in the live streams, you have my permission to try to protect your ass. Because if you're on the other side of me calling this stuff in the live stream, you're probably going to lose your ass. And I mean that not to be bragging, not to hurt your feelings, not to be arrogant. I mean it wholeheartedly because I'm doing this for my son. I'm not gonna blow smoke up his ass. I'm not trying to deter him from learning the shortest route and directional way to get right to the end of the conversation of knowing what to do. I'm trying to make it complete. I'm also showing him the levels that he has to understand in a graduated manner. And it's up to you to decide whether or not you want to be a part of it. Like I said, I don't care if it's one person that watched it. I know it's my son, and I want to keep doing it. No one's going to stop me if you don't put thumbs up. I don't give two fucks. I really don't care. You can do a thumbs down. I don't give a fuck. I'm still going to keep doing this. I'm going to do it because he wants to learn, and I want him to learn the correct way. And there's no better way than dad sitting out here doing it with a live chart, recording it, so that way it's recorded, it's logged, it's archived, and even if something bad happens and I lost my laptop, the recordings that are on it don't matter because I have it on an external archive. It's on YouTube. And there's witnesses all around the world seeing me do it, seeing that it works, seeing that the logic is the same stuff. It's not being bent and twisted and contorted. It's there. And now to answer the last question before I go grab something to eat. A Reaper fair value gap. Just because I introduced it, don't think you know it. Don't think because I showed my deuce, you think you know everything. Okay? There are certain little things that change in price that make it one thing or the other. Every fair value gap is not the same. If they share the same space of another PD array, it changes its character. It changes it. It makes it something else. Again, you don't know what the fuck you're talking about. Okay? So stop trying to teach and trying to call it something else. It's not. And when you question me about what I'm annotating on my chart, unless I come back and say, I messed this up, I messed that. I'm not done that. Like I've said, I referred to a market maker sell model when it was really a buy model. Or I referred to a second stage distribution when it was clearly going up, and that's reaccumulation. Second stage reaccumulation. Because I'm out here without script. And I'm going to do it eventually in the future. I'm going to say something that slips, that's a slip of the tongue. But that is a Reaper fair value gap that I showed the other day, and I told you to project it through, extend it through, and how many times it used it. Key takeaway, what is August 1st? First day of the week. What time did that gap get referenced? It happens every single month because the algorithm will go back to a specific date. What date would it use? First trading day, first day of week, Wednesday, previous Friday. That's not all of them, but I'm proving that there is an algorithm and it's going back to days specific. Why? Because it has to go back to a frame of reference. We're in a new month. Okay, what month are we in? August. Let's go back to the first day of August. Use the first pertinent PD array of August. Carry it through your chart, and you're going to see shit that you never saw before. That's all I'm going to tell you now. The rest of the stuff will be in the book. But when I give a specific PD array, and I annotate it, as long as I don't come back the day after, because I have made mistakes before. I've miscued, miscalled something, and it's just human error. Like I have a Biden movement once in a while. You're going to have it too. And every live streamer I've ever watched, they've said shit that I don't think they realize that if they go back in a recording and say, "Oh shit, why did I even say that? It was backwards." But I get it. And if you're a mature audience member, you know what a market maker buy model is if you've been around the block with me. And if it's going up, it's not distribution, that's reaccumulation. So it's just an innocent type thing. But that was an absolute reaper. A reaper is a fucking scythe. It literally cuts through the whole fucking month and makes it so tradable where any opportunity you see where you can engage that one, and as long as it matches time of day when the market should deliver, it's just obvious. This is a real easy. That's one of those times when you ask me, how do you know which fair value you got to use? Well, that's one of them because it has to be anchored to a specific day that is meaningful. First day of month, first day of week. What's the first fair value gap that forms after 9:30 on a Monday? Draw that bitch out through the time over the course of your week and the month. Oh, this is too good. I'll give you too much shit. I'm giving too much away. What the hell? I'm gonna have to open up a mentorship. I'm never gonna be able to eat again. How am I gonna keep giving this shit away for free? How can I make my ends meet if I keep giving it away for free, right? Oh, anyway, I've had so much fun with y'all today. I spent my time way beyond what I wanted to spend. So tomorrow we're going to try to be a little bit more economical and focus just on the 9:30 to 10:30 hour because I want to keep my son's focus into that little time window. Okay, I may leave you with things to annotate and watch going throughout the rest of the day, but Tuesday through Friday, through the rest of this week, we're just going to be doing 1 hour sessions. I don't know which day this week we're going to do 2 sessions in the afternoon. I'm leaving that open because I have to rely on my wife to tell me what that is. We have family members visiting us, and I have to navigate that. So I want to make sure that I tell you in advance. It's not because I got a bruised ego and I did something wrong on the stream and had to close it. I'm telling you in advance that they're going to be shorter because I have to make allowances for my personal family time, but still force my son into studying that individual trading day. Okay. So until I talk to you tomorrow, we'll be back again at 9:15 tomorrow, New York Standard Time, and we'll end it tomorrow around 10:30. And I'll talk with you all then, Lord willing. Until then, be safe.